Welcome to Flashstocks. I'm your host Enzo Orlando.
And I'm Nick Zuffernari.
Here at Flashstocks, our goal is to provide advice to people who are looking to invest in the stock market.
This is the information they do not teach you in schools. We're going to start small and grow. It's not a race or a competition. We can provide research data and insight that best applies to your personal portfolio. Remember, we as well as you are not in the business of losing money. We're going to provide useful data with backed up sources. So, to start off, we're going to look at three of the market indexes. First, we're going to look at the Dow Jones. This industrial average is barely up, with the big movers being Procter & Gamble, and Cisco and IBM are both down 15%.
The S&P 500 performed the best as they were up 131 points over the last week, and the Nasdaq has not been performing that well as they closed down 6% over the past week. Now we're going to get into some market predictions, and with our stock of the week. Our stock of the week is going to be Sony, and this just really depends on how the PS5 will sell, which is coming out very soon.
Agreed. So the PS5 will have the ability to snatch the entire market share of gamers. Although it has a steep price tag of about $500 per system, the gaming system will really have to overstep the boundaries of the last one for people to buy it. The stock really depends on how well the PS5 will sell.
Alright, so now we're going to get into our segment called Buy or Sell, where we tell you which stocks to buy and which ones to sell. Nick, what is your buy and your sells of this week?
Alright, Enzo, I'm going to start off with PayPal. So, first of all, created by Elon Musk, PayPal owns Venmo. So over the past few years, electronic payments have been booming. And with PayPal's foothold on almost the entire market share of ET payments, it's clearly a stock to buy. For example, Enzo, do you want to know how much the average PayPal/Venmo user has in their account?
I would say around at least $200.
Well, you're big wrong. It's about $485. And that source is from Spending Now. You can go.
Alright, another buy. Alright, so here are my buys. I'm going to go with Ford. They closed at $7 a share, but I believe next week their price will go up with more of their 2020 models being at a lower price for a lease, making room for their upcoming 2020 models according to Yahoo Finance. And if you're looking to lease a car, the fall is a great time to do it. My other buy would be Nike. They had a good week last week, closing at $118 a share with football season beginning on Sunday and some schools starting up college football such as Alabama. They're expected to go up, and especially with them having control of the MLB, NBA, and NFL uniforms, they're going to go up for sure.
Alright, I'm going to have to stop you there. First of all, I'm going to have to disagree with you on your Ford buy. I just don't think traditional car companies have been performing well in the past. Looking at Ford's balance sheet, you can see that total capitalization has decreased over the past 2 years, and this goes along with every other traditional car company. Looking at GM's financials as well, we can clearly see a decline in total revenue and gross profit. And looking at cost of revenue, although it is decreasing as well, profits overall have been steadily decreasing.
Alright, Nick, let me get into my final buy. This is a big one for you folks. It is Microsoft. And we all heard the big news about TikTok potentially getting banned in the United States only if an American company buys it. This was according to CNBC. And one of that companies that was the front runner to buy it was Microsoft, as they teamed up with Walmart to make a deal. TikTok right now has over 1 billion downloads worldwide. And I expect if Microsoft buys this on September 15th, it is going to be huge. This stock is going to go. You're going to bank out if you invest in Microsoft on Monday.
Oh yeah, TikTok's user platform has really grown over the past year. Alright, so next segment we're going to get into is going to be our long-term buys. So this is going to apply to people who want to hold a stock for over a year, because remember, the capital gains tax of 35% applies to securities for held less than a year. If you hold a stock or a security for more than a year, it's only going to be taxed at the 15% rate. It can vary between 15% and 5%, but yeah, that generally applies to a stock held for a year or longer. So I'm going to get into mine. Enzo, you clearly know this one. Boeing. This is only one of 2 plane manufacturers in the world. Airbus is really not known to make quality airplanes, which is why I think in the future Boeing will succeed Airbus in almost every category. And then, although COVID-19 has halted most air travel, the demand for new airplanes in the future, I'm talking 5 to 10 years will rise.
Alright, I'm going to have to disagree with you on that, on Boeing. This is going to be my sell stock of the week. Here's the reason why. First of all, I have stocks in the airlines. The airlines have actually surprised me doing best, especially United, Delta, American Airlines, Spirit, Southwest. They've been performing well during this whole pandemic. But here's the thing. Many of their planes are grounded at a bunch of airports because not as much people are flying, which means these big airlines, they don't want to really spend the money to buy planes because, they want to maintain the ones they have. And then if they're buying more planes, what's the point really? They'll just keep the ones they have now, and then once this pandemic ends, they'll go out and then buy those planes. So right now, I think Boeing is a sell.
Agreed. Yeah, it really depends on how you look at it. If you're going long term, I would say Boeing's a buy. If you're looking to make quick gains short term, Boeing is a little too fluctuations, I might say. But the next stock I'm going to get into is Lockheed Martin. So for those of you who don't know, Lockheed Martin Corporation is an aerospace, defense, arms, security, and advanced technologies company. So it's a lot to take in, but this stock has steadily increased over the past few years, with total capitalization up over the past few years, and debt has significantly lowered as well.
Alright, I'm going to get into my long-term buy right now. This is always a safe long-term buy, and this is Apple. A stock that you could never go wrong with buying, and the split that happened back on the 31st of August lowered the price of the stock, which was doing well for 3 days up until the market crashed last Thursday, which the price dipped down $17. And coming off this week, it stayed about the same and closed at $112.10. Recently, Apple is announcing new products coming out on September 15th, which include the new Apple Watch, the new iPad Air, along with the release of Apple One. So I'm telling you, September 15th, a big day for tech companies for sure.
You thinking about buying a new Apple Watch?
I'm thinking about getting the iPhone actually, and then getting the Apple Watch too. And I'll give you my short-term buy, which is Mintech System. It is a company that utilizes an AI and computer vision. According to Yahoo Finance, their revenue is expected to go up 70%, but coming off a higher sales in the past month, it is projected to go up between 16% and 38% in the next quarter. And jumped big before the bell closed. It is now trading at $11.81 a share, and I have a feeling this is going to be a big short-term buy coming up on Monday.
Yeah, that's an interesting one. So we're going to get into our next segment, which is stocks to keep your eyes on. This focuses on a particular industry, not necessarily one stock as well. But I'm going to get into it. So the best performing industries, I'm going to go with anything tech. Intuit, PayPal, stocks like that really have got a good market share of all the, like I said with PayPal, electronic payments, and then, Intuit, they own QuickBooks, they own TurboTax, and they use this new software called T-Sheets, which is used for small businesses to keep track of time and employee work days.
And another to keep your eyes, always keep an eye on the food and beverage industry, which have been performing the best during this whole pandemic, and especially the new products such as Beyond Meat, which is usually like that plant-based food that you would buy in the store. Tastes the same as regular beef, but just is a little bit cheaper to make.
Yeah, and I'm going to have to go back to that anything tech. For example, Apple does not have any debt, and for a company that size to not have any debt is tremendous. That's why I really think anything tech is a good buy.
And right now we are going to get into Flash Finance, where we're going to help you with your wallet on saving money.
So, to help you with saving money, we came up with a little plan. So, first of all, you got to save a portion of your paycheck from whatever job you have, whatever percentage you want it to be, 5%, 10%. Hell, you can even put 50% of your paycheck into the market as well. And not savings, and we'll tell you why in just a second.
Yeah, I'll tell you why that, because you may think that you are being financially limited by putting your money into a savings account, but remember, a sibling savings account has an interest rate of 2%. Meanwhile, the U.S. inflation rate has been steadily 3.5%, which means you are losing money with a savings account.
Yeah, and everyone thinks they're saving money.
That's how everyone always thought, but then if you get into investing in the market or trying to get into real estate or anything like that, you can end up growing your money that you make. And that is all we have for Flashstocks. Tune in next week for our next show.
Take care. Have a good one.
You too.